Do you run a business in Australia and are wondering if you need to register for GST? Or are you looking to start a business and have the same question? First, let's take a look at the rules around when you are required to register for GST. As set out by the Australian Taxation Office, if any one of the following conditions is met by your business, then it must register for GST. And they are: if the annual, current or projected GST turnover of your business is $75,000 or more, if the annual, current or projected GST turnover of your non-profit organisation is $150,000 or more, or if you want to claim fuel tax credits. Additionally, if your business is a taxi, limousine or ride-sharing service such as Uber, you must register for GST no matter what your turnover. Now, there are a few things to keep in mind about those rules. Firstly, when working out whether you need to register for GST, you need to use your GST turnover number, which may be different from your regular turnover number. The method the ATO provides to calculate GST turnover is: start with the total amount of your sales and other revenue for the year, including GST. Subtract any GST from those sales. Subtract sales not for payment and not taxable. Subtract sales not connected with your business. Subtract input tax sales. And subtract sales that are not connected with Australia, such as exports. The resulting number is your annual GST turnover. As a simple example, let's say you have a business with a regular turnover of $100,000 for the year, but when you subtract export sales, it is reduced to $70,000. This lower amount is your GST turnover, and it is the number used to determine whether or not you need to register for GST in that particular year. Another thing to keep in mind is that there are two types of GST turnover that the ATO will assess. The first type is called the current GST turnover, and it includes your turnover from the current month plus the turnover from the previous 11 months. The second type is called the projected GST turnover, and it includes your turnover from the current month and the next 11 months. So, if it looks like your business will have a GST turnover of $75,000 or more over the next 12 months, starting from the current month, you need to register for GST immediately. And a third thing to keep in mind is that determining whether or not to pay GST does not depend on the structure of your business. There are no specific rules for sole traders, partnerships, or companies. Your business's GST turnover is the main factor used to assess whether or not you need to register for GST, regardless of your business's structure. Another reason that you may register for GST is if you do so voluntarily because you determine that you will be financially better off. For example, if you run a small business with an annual GST turnover of less than $75,000, you may decide to register for GST because you want to claim back the GST paid on expensive equipment purchases. The amount of GST credits you want to claim back may be substantially more than the GST you will pay on your sales income. In this case, you may be financially better off if you register for GST, even though you don't have to. If you do register for GST voluntarily, you should keep in mind that you are generally required to remain registered for 1 year. This means that you should carefully calculate the benefits of claiming GST credits against the GST you will pay the government on your income. And one more thing before you go: if you do register for GST, you will need to lodge regular business activity statements, or BAS returns, with the ATO. For more information on BAS returns, check out our other videos.